Welcome back, mobile home park investors. In today's video, we'll further explore the exceptional benefits of mobile home park investing. Having already discussed the dynamics of supply and demand, we're now set to explore additional compelling advantages that make this such a rewarding investment. As we delve into these factors, remember that the insights we share today can serve as both motivation and valuable evidence to support your investment strategy. Whether you're presenting to investors, banks, or even discussing this plan with your spouse, this will be very useful evidence to help support your investment thesis. So let's dive in and uncover more reasons why mobile home parks are such a great investment decision. In this particular video, we'll cover the low barriers to entry that make mobile home parks the best rookie real estate investment. Low barriers to entry refers to the relatively minimal obstacles or requirements needed to start a business or enter a market. Of all the commercial real estate asset types, mobile home parks may be the easiest to break into. There are 5 advantages to MHPs that make them low barrier to entry. Those advantages are fragmented ownership, lower initial investment, less complex infrastructure requirements, less intense park management, and finally, more debt options. Advantage 1, fragmented ownership. Unlike industries controlled by a few large entities, the mobile home park sector is characterized by numerous properties owned by individual proprietors or small businesses, commonly referred to as mom and pops. This fragmentation opens the door for you to enter the market and acquire properties. It also provides the opportunity to enhance the operations of undermanaged mobile home parks and increase efficiency as you expand your portfolio. While the abundance of mom and pops has diminished slightly in the last few years, the next emerging wave of opportunity is with syndicators or lifestyle entrepreneurs who have overextended themselves or are seeking exit from the industry. This could be that they want to pivot into another asset type, or they no longer want exposure to real estate at all. In either case, this new class of owner represents a significant shift in the mobile home park market. What does this mean for us as MHP investors today? Well, whether we're aiming for lifestyle ownership or more ambitious portfolios, buying from a more sophisticated mobile home park owner like the existing syndicators that we just mentioned has considerable advantages. These advantages can include improved tenant screening processes and more robust financial data. This translates to smoother operations post-acquisition and stronger lending options when we go to banks who will require a thorough history of the park's performance and good accounting to back it up. Ultimately, this simplifies the purchase process for us as new investors and means that there will be less skeletons in the closet when we acquire the park. Our second advantage is lower initial investment. This refers to the CapEx requirements related to mobile home parks, which are typically lower compared to other types of real estate, such as apartment buildings or commercial properties. This can make it more accessible to individuals or small investors with limited capital. To give you an example, I remember an apartment building in my market that was up for sale. I excitedly pulled the offering memorandum from the broker only to find out that the property cost a whopping $26 million for just over 100 units. At 75% loan to value, that complex would require about $10 million of equity for both the down payment and CapEx. Can you imagine having to raise about $10 million with no experience, no network, and no capital of your own? Now imagine trying to syndicate and consolidate 1,000 apartment units. Circling back to MHPs, the average MHP trades for plus or minus 50K per occupied unit as of this recording. For easy math, let's say that this equates to 1/4 of the cost of this apartment complex, which, given the previously referenced price of $26 million times 1/4, we would arrive at $6.5 million for the mobile home park. At that same LTV of 75%, we would only need to raise around $2 million for that specific investment. For someone with limited experience such as yourself, a smaller capital raise of $2.5 million versus the $10 million makes closing, gaining experience, and consolidating much easier. Advantage 3 is less complex infrastructure. This means that unlike apartment buildings or commercial properties, mobile home parks typically require less infrastructure. While some amenities like roads, utilities, and common areas are necessary, they are generally less complex to maintain and understand compared to multifamily or other commercial properties. I'll caution, however, that even though it may be true that there is less complex infrastructure, people have correctly labeled infrastructure as the silent killer of mobile home parks, meaning serious issues with infrastructure that are not found or underwritten in the due diligence period can seriously hurt returns because of the high costs associated with remedying them. However, if we compare to a high-rise apartment complex where the infrastructure climbs high into the sky and is hidden behind walls, making it difficult to access, In a mobile home park, all of your infrastructure lies at or near ground level. This obviously depends on the topography of your property, but it is true in most cases. In theory, all that an owner needs to do is ensure that all the utility lines and roads lead to the homes themselves and that those pipes, electrical lines, and roads aren't broken. The residents then connect their mobile homes to your infrastructure. In most cases, this is much simpler than having multiple stories of infrastructure stacked on top of each other. It's important to note that MHPs having less complicated infrastructure doesn't make them any easier to own. However, it can lower the educational gap for getting up to speed faster. Advantage 4, less intense management. This refers to the fact that while there are still operational tasks such as maintenance and tenant management, the scale and complexity may be lower than any other form of real estate, particularly for smaller parks and especially for parks with many tenant-owned homes. This also translates to smaller operating costs. Some of our properties are as low as 25% expense ratios. This means that for every dollar of revenue that we collect from our rent checks, that we only spend 25% of it on our operating costs. Name another business where you're making 75 cents on the dollar. We'll always inject caution at the end of each of these advantages, so just a reminder, less intense management does not always mean easier. While yes, a tenant-owned home comes with less maintenance, that doesn't mean it's easier or comes with less challenges from a property management standpoint. Rather, owning assets with a larger tenant-owned home allocation creates more off-site tasks, which allows you to scale faster as you can hire better quality employees and have them work remotely. In short, scaling can be easier if you have the right strategy and implement the right systems. The final advantage that makes mobile home parks a great rookie real estate investment is creative financing options. Circle back to my $26 million apartment example. Do you think that the seller would ever consider holding the note? While not impossible, seller carry at an 8-figure level can prove difficult to find. While seller carry can also be rare in the MHP arena, data suggests these seller notes exist in higher volume than most other asset classes. In fact, 4 sellers that I have contacted in the last 4 months have all been open to seller financing, mainly due to the high interest rate environments that we're seeing today. But it's not just about seller financing. Getting loans for mobile home parks can often be easier than any other type of real estate asset, especially when you're dealing with multiple properties. Think about it like this. Have you ever heard of someone who buys and fixes up single-family homes to rent them out and refinance them? This process is known as BRRRR, and it might sound great, but it can quickly make a single investor's debt load add up. Fact, typically, banks are more eager to lend for single-family homes. However, that's if this home is someone's primary residence. Once you start trying to finance your 5th or 6th property without a solid business structure or enough capital, securing new loans with good terms gets tough. On the other hand, with mobile home parks, you can usually borrow much more money more easily for both individual parks and for your entire portfolio. It's also often possible to get non-recourse loans where the lender can't go after other assets if you fail to pay, depending on factors like the park's location, the size of the loan, and the quality of the assets. Overall, expanding a mobile home park portfolio can be quicker and simpler, largely because financing options are much better for mobile home parks. In summary, the low barriers to entry makes mobile home parks an attractive option for new investors in the commercial real estate market. These barriers include fragmented ownership, which presents numerous acquisition opportunities, lower initial investments, making it financially accessible for new investors, simpler infrastructure, which means there are less maintenance costs, and finally, less intensive management needs, easing the operational demands, especially on new investors who are trying to scale their systems and their portfolio. These factors collectively contribute to making MHPs a feasible and potentially lucrative starting point for individual or small investors looking to venture into real estate. This accessibility not only opens the door for many to enter the market, but also allows for growth and efficiency improvements in managing a portfolio of mobile home parks. I hope this video has gotten you amped to hurdle over those lower barriers to entry. Until next time, keep learning, keep growing, and I'll see you soon.